Welcome to Master Plan by Parkway. My name is Sven Olson. I'm a clean tech and investor relations executive, and today I will be speaking with Bahay Otakmak, the CEO of Parkway. The Master Plan presentation was released on the ASX by Parkway on the 22nd of June 2023. Hi Bahay, I'm looking forward to learning more about the Master Plan and discussing this exciting opportunity with you.
Hi Sven, thanks for agreeing to speak with me regarding the Master Plan.
So, where do you want to start, Bahay?
Initially, we'd like to provide an introduction to the Queensland coal seam gas sector. We'll follow that by addressing some of the challenges facing the Queensland coal seam gas sector, as well as the solutions, the technology-based solutions we at Parkway have developed to address these challenges. We'll then introduce the Queensland Master Plan and outline some of the value that we expect to create through this plan. The Master Plan is based on the coal seam gas, the CSG industry in Australia, predominantly the state of Queensland. These resources, predominantly in the Bowen and Surat basins, contain vast gas resources. During the 2010s, a number of groups invested in the order of $80 billion to develop these significant gas resources, specifically focused on LNG, liquefied natural gas exports. During 2022, these projects were estimated to produce in the order of 25 million tonnes of LNG, estimated to be worth $25 billion during the year. Given the size of these projects are governed by a robust regulatory framework.
It's definitely not well known outside of Australia how significant this industry really is and what the scale of it really is.
That's right, Sven. These LNG projects contributed in the order of 6% of global LNG export last year. That's just from the state of Queensland. So really quite significant projects. As you would expect for such a large industry, the industry is dominated by major Australian and global players. The structure of the industry essentially consists of a range of upstream operations where the gas is compressed and piped to the port of Gladstone in Brisbane, where 3 separate LNG projects liquefy that gas and export the gas predominantly to the major shareholders, predominantly Asian utilities. The production of coal seam gas generates significant wastewater. The structure of the gas is predominantly stored within these coal seams. In order to get to the gas, these seams are depressurized, where the water and the gas is separated and the gas is sent to these LNG compression facilities, and the residual wastewater is stored in treatment dams. It is this wastewater stream we are most interested in at Parkway, and we are pursuing through our master plan. These wastewater streams contain significant salts, and to date, despite best efforts, the industry has been unable to develop a solution for these complex wastewater streams. Before we do a deep dive on the coal seam gas challenges and the solutions Parkway has developed, I think it's helpful to provide an overview of the timeline of how the industry has developed and how Parkway has developed a capability to address this very significant challenge. I'd like to start in 2010, where at the time BG Group sanctioned what was the world's first coal seam gas to LNG project. Subsequently, that company was acquired by Shell in a $90 billion takeover, and progressively those 3 or 4 LNG projects were developed and brought into production during this timeline. At the same time, the industry was developing a range of guidelines governed by regulatory authorities to ensure the wastewater production was being managed appropriately. That's been a significant evolution for the industry. At the same time, through a range of corporate activities, Parkway developed its own capabilities. Parkway, whilst it was initially listed as a mineral exploration company in 2010, has progressively made a number of acquisitions and developed significant capabilities, progressively leading to a range of partnerships and capabilities that enabled us to be able to evaluate these various wastewater streams and develop solutions for the industry. This process culminated in the completion of a significant feasibility study in early 23 and the recent announcement of master plan.
Well, in the addition to the rapid development of CGS industry, this has been quite a journey for you yourself and Parkway. And as you know, I've been following the Parkway story closely since you joined the board in 2019 when we met in Germany. And I have been really impressed with how you have methodically put this into place, building the team, building the capabilities.
It has definitely been an adventure, Sven. If the team continues executing methodically, I think this will really be the beginning of something quite transformational. So it's been quite a significant journey, but the traction we've been generating in the industry with major players has been very encouraging. Chapter 2 will providing a bit of an overview of some of these more detail about the waste, brine and salt challenges that are impacting the coal seam gas industry in Queensland. A little bit of an introduction to the structure of the wastewater problems facing the industry. So we outlined earlier how these coal seam gas resources need to be dewatered to enable the production of gas. The first stage of the treatment process by the industry at the moment involves a series of water treatment plants that take the coal seam gas water and concentrate that water and produce fresh water, and they store the residual brine. This is an established process within the coal seam gas industry. At present, this is where the water treatment process stops. But in terms of the future aspirations for the industry intends to crystallise these brine resources and produce concentrated or solid salt products, which will require disposal. Unfortunately, that's not a very sustainable treatment solution, and despite the best efforts of the industry to date, the industry has been unable to develop a technically and commercially viable alternative.
So what you're describing is this is the issue, the challenge that the industry is faced with, but as of today, no salts have actually been disposed, right?
That's right, Sven. So at the moment, the industry stops treating the brine at the point of concentrated brine. But if it were to produce a salt product, that will require disposal, and there are significant costs associated in the production of that salt, as well as the disposal of the salt. So the industry really, in recent years, has been trying to identify various options to be able to avoid that process. Once those salts are disposed, there are significant ongoing obligations to monitor that waste salt, and there are also levies payable as part of that disposal process. So it's quite an undesirable process, which explains why the industry at present hasn't gone further downstream to develop a permanent solution.
But they are obliged to deal with the residual brines.
To date, the industry is storing the brine in regulated ponds. That's a very onerous process, and they're regulated facilities, but that hasn't, to date, gone further downstream to produce a concentrated or to produce a solid salt product to date. I'll explain further in the presentation about some of those challenges. Some of them are capital related, and some of those involve it's a very inefficient and capital intensive process only to produce waste salt at the end. So the caution by the industry at this stage, I think, has been warranted. If the end solution was a permanent resolution to this problem, I think the industry could be excused for dragging their feet, but I don't believe that's the case. The current regulated waste disposal approach is not a permanent solution, so some caution, I think, is warranted at this stage. Looking at the structure of where this wastewater is coming from, earlier in the presentation we outlined a series of upstream operations where these gas resources are produced. Co-located at these facilities are a number of desalination plants that concentrate the groundwater. So in this case, there's 55 gigalitres of water produced annually, and 91% of that water is actually recovered through these desalination plants So that's a great effort to reduce the size of the waste volume. Unfortunately, the residual brine that represents 9 or so percent, about 5 gigalitres per year, contains all the salts. At this stage, this is the brine that's being stored, for which there is no further solution. If we are to go back to your comment earlier, Sven, about what are the options for dealing with this brine, at the moment there would be two conventional approaches required to dispose of that brine. The first stage, if we take this 4.8 gigalitres of brine that's being produced annually from the prior slide, that will need to be concentrated further. So we require a brine concentrator. And to date, there is only one of the 4 major LNG projects, Shell QGC, that has invested in such capital infrastructure to date. But even then, there's a subsequent stage required, an actual crystallization approach to convert the concentrated brine into a solid product. So they're very capital-intensive technologies, and at the end, the end product is still a waste product. So that's the current structure of the industry. The industry has contemplated transporting some of these brines to central locations because it would be unfeasible to build 15 or 16 separate brine concentrators and salt crystallizers. So the industry has explored a hub-type approach where there are some central synergies in developing a centralized hub, and we've adopted that process also within our master hub plan that we'll be outlining shortly. Just to get a bit of a sense of perspective, these brines, although they progressively are concentrated from reverse osmosis brine to a brine concentrator through to salt, the same amount of salt, roughly 200,000 tonnes per year, is contained within these brines. And over the roughly 30-year operating history of these operating life of these projects, it's estimated that 6 million tonnes of salt will be produced within those brines. So it really is a significant issue for which there is no long-term solution. Just to put that 6 million tonnes of salt into context, so at the moment these are concentrated brine ponds associated with one of those LNG projects we mentioned earlier. And whilst those brines can and will be concentrated, the 6 million tonnes of salt they're going to produce, few outside the industry, I think, appreciate the size of that salt volume. And we've had people in industry sort of try and put some perspective on one of the analogies or references that's being used is it's comparable to the size of the Great Pyramid of Giza that weighs approximately 6 million tonnes. So obviously a very significant problem. And I think to put that into perspective, a sort of, big pile of salt the size of the pyramids, we've used a slide here, Sven, that you'd be familiar with, of course, in Germany. Definitely. And this is, of course, a legacy of potash mining over many years in Germany. And unfortunately, when it rains, there's runoff from these salt heaps. They make their way to the local river, and there's decades of challenges associated with that. And of course, a lot of these potash projects were developed, a century ago, and that may have been acceptable at the time. But in 2023, I think we can do better, and I think we should do better. So that's really part of setting the scene for master plan. This is the sort of scenario we specifically want to avoid, which is why throughout the presentation we'll be touching on the many advantages of a technology-based solution to develop a permanent problem rather than stockpiling the salt or even worse, burying it.
Yeah. Yes, the salt heaps from many years of potash mining in Germany have unfortunately left a terrible legacy here. I know Parkway has worked on at least one of these potash projects in the past, but the scale of these problems will take generations actually to resolve. It will be amazing if the work Parkway are doing can prevent a similar legacy in Australia for the gas industry, really.
Yeah, for sure, Sven. I mean, that's definitely what we're working towards, to be able to develop a permanent solution. So as the industry operates and it decommissions its operations, we think it's only appropriate that these solutions are also addressed during that process. Going back to that earlier slide where we made reference to the brine, which is water that contains dissolved salts being concentrated in a brine concentrator. This is one of those projects operated by Shell QGC. We provide this just to provide a sense of the scale of the project. So this is a $1 billion project. So several brine concentrators were developed for the Shell QGC project. The operating contract to operate these projects was an $800 million contract. This is in 2012, so those prices would have gone up significantly. And this is really the base case for those other 3 LNG projects. For them to deal with their current wastewater volumes, they will need to build similar infrastructure to concentrate their brine. And even then, they will just have a concentrated brine. They will still need to crystallize that. And then eventually dispose of those salts. So the industry has a big journey, a big capex spend in front of it to be able to, permanently address many of these challenges. And whilst we'll address it later in the presentation, I think it provides some context that the solution that we're putting forward, based on our own technologies, is far more capital efficient, far more energy efficient, and ultimately avoids the generation of that waste profile, which I think is very, very important. We provide a little bit of information here. I think it's important to understand the regulatory framework. So these projects are highly regulated, and whilst there's a range of state legislation and even Commonwealth legislation that applies to these sorts of projects of this scale, in particular, I'd like to just focus on this waste management hierarchy that really outlines that if you're dealing with waste brine generated from these sorts of activities, there really is a hierarchy where you need to really be working towards preventing the disposal preventing the production of these wastes. And in this case, that's not possible because you need to dewater these coal seams. But having produced this brine, there's an expectation that you should recycle or produce products from this waste brine. But only after all these options have been exhausted should the industry consider disposal. So that's really understanding that hierarchy is really important, and that's been in place for more than 10 years now. So it's a very strong policy framework. And only this year, only a couple of months ago in March, the Queensland government came out with another 10-year plan outlining its ambitions for treating these problems. And we were very encouraged to see that the government really reiterated its emphasis that these brines really should be used to produce usable products where feasible. And that would flow through to how the regulatory process is operated. So if a LNG operator or coal seam gas to LNG project operator wishes to dispose of their brine, they really need to demonstrate that they've exhausted all options and there really is nothing feasible out there. So from a Parkway perspective, we think that's a really strong, provides us with a really strong opportunity given the technologies we've been able to develop, and importantly, also outlined in this brine management action plan were a range of specific references to being able to produce usable products and the role of innovation to achieve improved outcomes.
And given the priority that is given to producing usable products instead of disposing the salt, this should really provide strong support for Parkway.
Yeah, that's right. It's great having a new technology or a new approach, but it's a really big advantage that there's a really strong regulatory framework that really provides certainty for companies like Parkway that are investing effort and resources to developing solutions. So it's not just would be nice. It really is the priority for the industry, and has been so for a while. So I think that stable and rigorous regulatory framework is very important. Just to provide some background here, there were a number of detailed studies. So in 2017, the industry performed a detailed study, the industry body through APPEA, that report's published, and we provide a link here for viewers to view that report. And it really outlines what the alternatives are to deal with this waste brine and salt problem. Upon the completion of that report, the government asked the University of Queensland's Centre for Gas Studies to review that report, essentially as a peer review, to be able to confirm that these really are the best options available for treating these waste brines. And without doing a deep dive, but the industry essentially identified there were four key approaches. The preferred, going back to the idea that we should be reusing these waste salts to produce products. The industry identified a selective salt recovery really as the preferred approach. There were some challenges associated with that approach around low-value products, for instance. The other two approaches, ocean outfall and brine injection, were dismissed fairly quickly once it was agreed that releasing concentrated brine in quite popular surf beaches wasn't a good idea, and similarly, injection of waste brine really isn't feasible for those who understand where these resources come from. They come from tight, unconventional resources, and they underlay the Great Artesian Basin, one of the world's largest inland water basins. So that also was unfeasible. And that left the industry with one final approach, salt encapsulation, which really involves a very sophisticated disposal facility, building line ponds, burying the salt, and really monitoring that indefinitely, which really is a highly problematic approach. But with the rest of the alternatives really falling over, the industry has just been left with salt encapsulation. And both the industry and the regulators realise whilst that's the currently preferred option, the industry is exploring a range of opportunities to really address this problem. I guess we're having a little bit of fun here, Sven, but I'm not sure if you remember in the 2002 Winter Olympics in Salt Lake City, we had a ice skating event where our runner in the race was at the back of the pack, and all the other options, all the other skaters had fallen over, and Stephen Bradbury came through at the end, essentially because the other skaters had fallen over. And I guess when describing, when we're speaking with stakeholders and they're sort of suggesting to us, but the industry has, really gotten behind a salt encapsulation approach, I really sort of bring up this analogy. It's gotten behind salt encapsulation only because the other options were so terrible and non-starters. This is really what the industry was left with. And I think that's important as a starting point, which would also explain why the industry has been reluctant to adopt this approach. I think, and sort of in addition to that industry reluctance, I think a key part of it worth touching base on is really the community reluctance. These are none of the local farmers, none of the local communities really want millions of tonnes, whether it's the pyramids above ground or the pyramids, buried underground. Ultimately, these are enormous waste resources, and farmers who've been there for generations, or local communities really don't want to deal with a legacy of these wastes. And through various publications in the media, there's even a couple of sort of videos that have sort of been released, really highlighting a little bit of community distrust around what the industry is doing here. These views aren't held by Parkway, but they are nonetheless views that exist in the community. And we think by, really providing a genuine solution that permanently addresses this problem, we think would really, be well received by these local stakeholders. And really, I think also gives the gas industry an opportunity to really demonstrate that they are evaluating, adopting state-of-the-art technology to provide a permanent solution. So these resources are just a couple of examples that we've highlighted just for general information only. And once again, they're not views held by Parkway, but they are common views in this part of the world that I think is worth referencing.
Yeah, given the lack of options for dealing with the waste brine and salt, I can understand the community concerns. The situation in Europe is even more serious, where it is very difficult to even develop a new mine or oil or gas project unless you can really prove you will manage your waste and not damage the environment. It is not optional, it is actually an essential requirement.
Yeah, that's absolutely right, Sven. I mean, it's a requirement for these operating projects. There are other projects that are yet to be sanctioned in the Northern Territory, Narrabri, New South Wales, and all these projects are being held to that high standard. So there's a lot of oversight to ensure they're developed sustainably. And I think in terms of Parkway and what we're doing through Master Plan, I think is an amazing opportunity for us. So having outlined the size of the Queensland coal seam gas industry, the problems facing that industry, really the next section is talking about how are we at Parkway or Queensland Brine Solutions developing a solution to address this very significant problem. That's the focus of this chapter. So this is a snapshot of how we've gone about taking a problem, in this case the waste brine here on the left of screen, and how we've been able to adopt a series of process technologies. So there's a range of pre-treatments we adopt in our upstream process, and further in the presentation I'll provide an overview of what the upstream process is and what the downstream process is. But this is just an initial diagrammatic representation. And these are processes developed by Parkway, proprietary technologies, we own them. And by incorporating these specific technologies, they've enabled us to take this very complex problem and convert it into a solution, produce additional water that we recover. But in addition to that, we produce a range of high-value industrial products, predominantly lime and salt, from our process. And that's something that we've been working on for a number of years. And that's really the crux of our technology that enables us to take a very complex problem and deliver a solution. Just a little bit more detail on the technology platform. This is something we've been working on for more than 10 years, prior to my involvement with Parkway, whilst we were an unlisted company. There are a number of patented technologies within our portfolio, and we have a very sophisticated process that enables us to be able to simulate the performance of these technologies, model the performance, experiment, pilot, and go back and continually iterate to really get some confidence that we can provide a very robust solution. So this is our core business within Parkway, and it's something that I think our results really demonstrate that it's something we've been able to commercialise, and in many respects where large companies have been unable to develop a solution. So I think it really speaks volumes about our capabilities within the group. Most notably, late last year, we came out with a series of announcements. A key announcement was on the 29th of November, where we provided some details around how we described that we had, cracked the code for being able to treat these brines. I haven't spent a lot of time describing the chemistry of the brines, but they're very, very complicated, lots of impurities, so very challenging. So being able to come out and confirm we've been able to do that at lab scale was very, very exciting. That was at our annual general meeting. And only 3 or 4 weeks later, just before Christmas, we came out with a similar announcement that we had scaled up the piloting work from a few litres at a bench scale to 1,000 litres at a pilot scale. And our ability to scale up so significantly in such a short period of time, once again, I think points to our capabilities and confidence in the work we're doing. So that was a very, very exciting process development work. And in terms of having developed extensive piloting capabilities on a range of projects, including coal seam gas brine from multiple projects, so this is real brine we're working on, enabled us to develop a end-to-end solution for the coal seam gas industry. And as part of our commercialisation plans, we're working with well-renowned parties. So in terms of a lot of the process development work is supported by Victoria University, and the feasibility study we recently completed, as well as transitioning these studies from a feasibility study to an engineering study feed and through to execution, is supported by a major global engineering company, Worley, who's been our strategic partner also for a number of years. So that really is provides us, I think, the capability to be able to pilot our technology on real brines, perform a feasibility study, work with the customer to demonstrate that we can roll out this technology, and the whole time we have a global engineering company behind us that can help realise this opportunity. So that's really given us an immense amount of confidence in recent years. And off the back of all that work, we've recently incorporated Queensland Brine Solutions specifically to pursue this opportunity under what we're describing as master plan.
Well, I can see really why it has been so difficult for the industry to develop an end-to-end solution. But it is really exciting that Parkway has been able to develop such a solution, or is coming up with such a solution. And of course, having Worley as a partner should provide the industry with confidence that the technology can be rolled out commercially as well.
Yeah, that's right, Sven. That's a very important part of our own process development work, but particularly the commercialisation. When we're collaborating with major global players, being able to demonstrate that we can scale up the technology and work towards delivering a commercial plan, I think is a very important part of the value proposition here, and really underpins a key part of master plan. So just jumping into sort of a few more details about the technology. Earlier, I described that we have an upstream technology package and a downstream technology package. Essentially, what the upstream technology package enables us to do is to concentrate the brine on site, so without having to transport it to a central hub specifically for concentration. And the process we've developed is a lot more efficient. For example, compared to that earlier plant I described, it has a much, much lower capex, a lower energy intensity, cheaper to operate. So there's some really significant advantages there. So really, and that's all based on our own in-house proprietary technologies. And essentially what this enables us to do is take the waste brine, put it through our upstream plant, and produce a concentrate quicker and cheaper than all the alternatives out there. So that's a key part of our process technology platform. So this is the upstream technology package. And once we produce this concentrated brine, that's then transported, and depending on the location of the projects, that gets transported to the downstream technology package. And this is an illustration from our engineering team of what the downstream technology package looks like. And essentially, the role of this plant is it takes that brine concentrate from the upstream plant, and really it's a chemical complex. What it enables us to do is break down the constituents within that brine and produce these products we outlined earlier, the caustic soda, the lime, and the salt. So essentially, when we combine that upstream package and that downstream package, we take in waste, we concentrate, we beneficially treat through our process, and we produce a range of products. And that's something that's required multiple technologies, plants at different locations, very complex process development work, which is really why the solution has eluded the industry for so long. And it's something that by methodically focusing on this initiative over many years, we've really arrived at a point where we feel really confident, which is why we were able to make those disclosures we have recently. And importantly, all these technologies are owned 100% by Parkway in-house. So bringing those technologies together into a central hub, just as we described earlier that the industry was contemplating pooling brine into centralised locations for concentration, we would have a similar concept, except we'd be transporting less brine to those hubs because of our upstream technology package. So our plan essentially involves a series of upstream plants co-located with where the existing water treatment plants are, concentrating that brine and transporting the concentrated brine to a centralized downstream plant, and as a result, converting the incoming brine into these products. So in order to treat the entire waste brine for the CSG industry, we'd be looking at 4 hubs, essentially of 75,000 tonnes per annum of salt treatment capacity. So the incoming brine contains 75,000 tonnes of salt. If we had 4 of these plants in operation, it would take in 300,000 tonnes of salt, and over the next 20 years, we would treat the 6 million tonnes of salt that's produced and will be produced during the life of these projects. So that's really the structure of the hub. There's more details around the timing of these plants, how these plants create value, but this is really an example of what a hub would look like.
So basically the takeaway is that Queensland Brine Solutions takes concentrated waste brine and converts it into a product that actually can be sold and not needs to be disposed. You're completely getting rid of disposals.
Oh, that's right, Sven. So it requires a range of processes, including this upstream and downstream plant. But to summarise, this is what we described earlier as really an end-to-end solution to be able to take that problem and deliver a solution. And I should add, there are a range of advantages in terms of the upstream concentration, but also in the downstream. Our plant is much more sophisticated. It's much smaller because it's treating a concentrated brine, and really it requires less energy and, of course, therefore less CO2 emissions. So really a far smarter way to treat these waste brine streams. Now, I know all the viewers won't be engineers, so I won't go into all the details, but I guess I just wanted to sort of contrast perhaps how our approach compares to what the industry has in mind, just to sort of understand where the value is generated. So in the first instance, this is what we're describing as the industry's base case. The industry's current thinking is this salt encapsulation facility, and that requires the waste brine, all of it being transported to some sort of brine concentrator, and that brine then being crystallized. And after these 2 very capital-intensive processes, it generates salts. So there's no revenue, and that then needs to be disposed. So that's why the industry has, been keen to explore other alternatives. This isn't a very attractive value proposition, even for very significant and profitable energy companies. In contrast, our plan takes the same brine, but by concentrating the brine upstream, we're only transporting a concentrate. So we have less brine to concentrate. That's because we recover fresh water. And then once we transport the concentrate to a downstream plant, we have less brine to transport. And once we build our downstream plant, unlike the salt crystallizer, we actually produce a bunch of, or several fractionated products, which, because they're sold, we then therefore don't have to dispose of them. So we're generating revenue and saving disposal costs. And this whole process is cheaper to build, cheaper to operate compared to the alternative. So really quite an attractive value proposition. There are several additional optimizations that are available to further improve what products are recoverable through our process. But for the purposes of this presentation, I won't do the deep dive, but it's something our in-house process engineering team has done a lot of work on, and we see opportunities to further improve the process and even produce some critical ingredients, including potash, which in small amounts as byproducts. But there's several opportunities there. And the second optimization opportunity is, instead of producing salt as a product, which is a very low value product, and we don't attribute much value to that salt in our own internal techno-economic evaluations, but that salt can be diverted to a chloralkali plant which essentially takes in salt and produces a range of chlorine-related products. It produces a chlorine gas, a hydrogen gas, but importantly, it produces a lot more caustic soda, which is, of course, one of our key products. And this is an opportunity that we're familiar with. We have colleagues in our team that have designed and built chlor-alkali plants, so we have very significant expertise. Our partners at Worley have very significant expertise in building chlor-alkali plants. At the moment, we've left it as an optimization. It's not our core. It's not in our core base case for master concept. But the reason we've wanted to include it here is there's an opportunity potentially to generate another $200 million a year in revenue by adopting this approach, and potentially without any additional capex. So really, it's something that we need to do a bit more work on, but something that I think offers very significant upside.
So the potential opportunity to create an extra 200 million Australian dollars in annual revenue without adding to the capex, honestly, that's almost sounds too good to be true. How does that how does that happen?
Yeah, no, of course. I mean, I think it's a great question, particularly given how significant it is. To take the second part of the question, why we haven't incorporated this in our base case. So some of the products we produce, we know we have a market for the caustic soda that we'll touch on in a moment, that will take much more caustic than we could ever produce. And the hydrogen gas, of course, there's many applications and a lot of interest in that. But the chlorine gas, there's some work we have to do to satisfy ourselves that there is a market for that chlorine gas. It's quite dangerous. It's used in water treatment, so there may well be some opportunities there. But we haven't done enough work to satisfy ourselves that we should adopt this technology right now. But in terms of where the value is created, if we weren't to build a chlor-alkali plant, we would build some other crystallization plant that would produce the industrial salts. So our internal engineering team has done enough work to demonstrate that instead of building our own part of one of our own downstream plants, that may enable us to redeploy that capital and build an integrated chlor-alkali plant, which would eliminate the requirement for building a downstream crystallization plant. So really, it's an optimization of capex. So a really exciting opportunity, and we'll have a bit more to say about that soon. So having outlined our technology, now this section, Sven, is based around outlining our plan for QBS, what our master plan is to utilise our technology to really address these very significant challenges. So we outlined earlier in a prior slide how the industry would take its concentrated waste brine and build a concentrator and a crystallizer only to dispose of that salt. So that's really the industry's base case scenario that we've grayed out. In order to provide a comparison, how does Parkway's master plan, what's that alternative look like? We've included our downstream technology. So we take the same brine stream, but we concentrate it using our upstream technology. And then we take that concentrate and we put it through our downstream technology, and we produce products compared to the industry's waste. That's really at a high level, the major difference. And just as the industry would send its brine to a central hub for processing, we would send a concentrate to a central facility and produce products. So really, the industry is best placed to decide where these plants belong, what the best transport routes are, and given we're transporting less volumes, we essentially can provide a better solution to what the industry is, what's currently available to the industry. So that's quite exciting. And graphically, if we're to look at this map here on the right, these grey spots where the current desalination plants are, in our view is we would transport some of that concentrated brine, much smaller volumes, to a central hub, and at these hubs produce the products that we've already discussed, and those products would go to local markets. So the salts could either be transported to other chlor-alkali facilities or industrial processes, depending on what our own aspirations are. The lime product goes to local agricultural industry. There's acid sulfate soils that need the pH increase, so there's a ready market for those. But by and large, the most significant is the number of alumina refineries in Gladstone, which incidentally is where those LNG projects are as well. And these projects use hundreds of thousands of tonnes of caustic, the same 50% caustic we'd be producing. So there is an opportunity to displace expensive imported caustic with locally produced caustic that's essentially a byproduct. So really an opportunity to take a problem, use technology, convert the waste into a product, and deliver a solution so everyone's a winner. The local stakeholders are happy, lots of industries for lots of advantages for industry, and for Parkway, it's an opportunity to really be part of the solution.
Yeah, I can see the proposed hubs are centrally located to be close to existing water treatment plants. That makes sense. But it also must be very attractive to have local markets for the products. So it's really a waste to product, as you say, a circular economy type of opportunity. Really exciting.
Yeah, look, that's right. I mean, there's a lot of initiatives. I mean, just last week, I'm based in Brisbane. Last week we had the World Mining Congress in Brisbane, and the government announced a number of initiatives, critical minerals plans, and really there's a lot of policy and regulatory support to be able to develop local supply chains, local industrial capacity, lower the carbon intensity or the miles travelled for many of these products. And particularly for the alumina industry in Gladstone, decarbonisation really is a big priority. So yeah, it really is a circular economy type opportunity, and look forward to providing more details about the opportunity. So in terms of how these plants would be rolled out, that is to a large extent determined by the timing for treating these brines for the industry. So there are currently 4 LNG hubs in operation. They have an expected life expectancy of another 20, 25, potentially 30 plus years. And it is during that period that these hubs will produce the roughly 6 million tonnes of salt. We estimate more than half that, or approximately half that salt, we believe, has already been produced, is already sitting in brine ponds without a permanent solution. So we would work with the industry to be able to develop the hubs in a timeline that would enable the industry to be able to meet its waste brine, processing requirements. And there are also opportunities to develop a number of upstream hubs to minimise the volume of the waste initially and get enough critical mass to be able to justify being able to combine the concentrated brine in a larger downstream plant. So there's some work we're doing at the moment, discussing with a range of partners to really make sure that we develop this in a logical way that makes sense for all the stakeholders. We're not duplicating infrastructure, potentially sharing some of these facilities across different projects. So really lots of exciting work we're doing at the moment. I guess a key point I'd like to address in terms of the timing, not specifically in the defence of the gas industry, but I think it's just important to understand some of the decision-making challenges. So we're about to get into the techno-economics in a moment, where we describe the cost of these various approaches. And given these alternatives are very expensive approaches that don't actually solve the problem, the industry has naturally been reluctant to adopt an imperfect solution. So it's our view at Parkway that as we develop Master Plan and we develop a permanent solution that's technically and commercially viable, has many advantages to all the alternatives the industry has considered, we really think the industry will adopt this a lot faster than what has perhaps, faster than what the industry has contemplated for the salt encapsulation. So that's a little bit of sense of the timing, of our timing for the industry.
I would argue you're delivering a solution on a silver platter, really, to the industry.
That's right. That's right, Sven. And there's many attractions. Of course, solving the problem, and which is why we did the deep dive on the technology, I think is really important, because ultimately it's the technology that enables us to do that. If this was something that was readily achievable through conventional low cost technologies, you could be sure the industry would, of course, already have adopted such a solution. So yeah, really exciting opportunity in the context of what is master plan. So it really is a concept that we've developed at Parkway. Having understood the challenge, having developed technology, it really is our plan to roll out our technology within the CSG industry in Queensland. And there's really two key parts of delivering our technology. The first part, of course, is being able to deal with the disposal requirements. These salts have to go somewhere. We're able to utilise those salts, so that prevents them being disposed. At the same time, we're producing products from these waste streams, which generate significant revenue. And I think that's a really important part of the equation, because it is ultimately this revenue that enables us to build plants and offer a commercial solution. So that's something we spend a little bit of time talking about in the next few slides. And in order to be able to pursue our master plan and these solutions we're proposing, we've developed Queensland Brine Solutions to be able to roll out this technology. I guess from the outset, we've been very sensitive to understanding the requirements of all the various stakeholders. So these projects have been in operation for 10, 12 plus years. So there's a lot of learnings there about engaging communities, about some of the challenges, about the regulatory environment. So really, in addition to our own technology development, we've done a lot of work to ensure that the technology we develop and the solution we put forward really does enable the industry to meet its objectives. It helps to assist the industry get the rural communities get comfortable that this really will be a permanent solution. And it also helps, government and regulators really get comfortable that there really is an opportunity to deal with this waste. We shouldn't approve the disposal of salt, as has happened in times past, as that would be unacceptable. So in terms of our priorities within Master Plan, we're in the process at the moment of engaging a range of partners within industry, within regulatory authorities. We have a series of meetings lined up in coming weeks and months. And we're also looking for alignment between strategic partners, potentially investors or off-takers of some of these products. These are very significant volumes we're talking about. And really, we're focused on positioning QBS to be a viable alternative, so that industry, so the Stephen Bradbury option of the salt encapsulation that the industry felt compelled to get behind as it was the only alternative. We've really taken the challenge very seriously to put Parkway and Queensland Brine Solutions forward as a viable alternative for the industry to consider. So that's really the priorities for Master Plan at the moment.
I really appreciate that you're considering all the stakeholders in this, and in 2023, and with all the ESG challenges, I think this is the way to go.
Yeah, look, I think so, Sven. I mean, there's a lot of awareness about environment and sustainability, but I think also everybody needs to feel like they've won from this situation. I mean, this doesn't work if only the gas company or only the community or only the regulator wins. Ultimately, we all have to coexist, and we've really developed this master plan in quite a balanced way where I think all the stakeholders, we don't have to trade off sustainability or the environment or the community in order to enable gas production, which of course is very important for industry and the community as well. So I think that's very important. Having outlined the challenges facing the coal seam gas industry, the Parkway technology-based solution, and an introduction to the master plan to address these challenges, I think it's important to now transition to describing how is it that the master plan creates value for all of the stakeholders. On screen, we've started off with presenting two of the key scenarios the CSG industry has recently evaluated. On the top is the approach we've described to date, the salt encapsulation facility. This essentially represents the base case for the industry. As we can see, this scenario requires an additional investment of approximately $9 billion and very significant operating costs just to be able to concentrate and dispose of those waste salts, which will require a further $1.9 to $2 billion. So this is, of course, a very expensive scenario and explains the reluctance of the industry to adopt this approach. The other approach we haven't spent a lot of time talking about is a selective salt recovery approach, something the industry has previously explored and is similarly capital intensive. But the appeal of this option is that instead of producing waste salts, it produces some low-value salt products, but it still produces some wastes. And unfortunately, the complications associated with the alternative approach don't justify being able to go down this selective salt recovery approach. There are concerns about product quality, and there are some technical risks as well. So these really represent the first and second best options the industry has currently evaluated to date. And we present these as a baseline as to the options currently available to the industry prior to master plan being presented. Once again, we've just replicated that base case scenario, the salt encapsulation, just for reference, just so we can see, what's the alternative available to industry. And now we present some numbers for what does the Parkway base case or what does the Parkway master plan numbers look like. So in order for us to deliver an upstream technology and downstream technology package across the entire industry, so 4 hubs as we've previously discussed, the capital costs are circa $1.5 to $1.6 billion. So obviously very significant capital savings, and similarly much cheaper to operate, which makes, from a capital investment perspective, obviously a very attractive alternative. But in addition to the capital costs, our scenario, because we produce a series of products, it means that we don't pay $2 billion in disposal costs, whilst at the same time generating significant revenues. So over the life of these projects, that could amount to $4 or $5 billion in operating savings compared to the alternative. So collectively, we think not just technically or in terms of from a circular economy, but just based on the economics of that solution, we think this is a compelling opportunity. And once again, in order to provide the industry with detailed numbers, we are of course having discussions with a range of parties, but just to publicly put out how do our numbers based on our own internal modelling. And we've done some very detailed work over a number of years. So we have a reasonably high level of confidence in these numbers. We've developed a basis and we've benchmarked how much does the industry's alternative disposal or selective salt recovery approach, the $9 billion alternatives compared to our capex. And similarly, we transport less brine, it costs us less. It costs us less to operate our plants, and whilst we pay a small amount to dispose of these salts, the industry, under all alternative scenarios, will have to pay very significant disposal costs, and once again, our approach generates significant revenue streams. So on all the financial metrics, our solution, as outlined in Master Plan, really does compare quite favourably.
Oh, wow. It's very unusual that in that it actually costs less to build a more sustainable solution. And this option also generates revenue on top of it.
That's right, Sven. It is quite unusual for the sustainability-based approach to cost less to build and operate. And fortunately, that's the power of technology. Being able to invest in the development of innovative process technologies, fortunately, it allows us to more efficiently concentrate, transport, dewater, and produce more valuable products. So it's really exciting that we've been able to develop these process technologies, work with great partners, and finally put forward a viable solution that stacks up on technical metrics, social metrics, ESG metrics, but of course commercial metrics, which I think is very important and really provides a strong basis for industry to get behind something that does make sense, in which case we think there'd be less of an excuse for the industry to suggest that they should continue exploring options. We think the time is now to be able to move down this path. These are the technologies, the disposal approach that the industry is currently had put forward, the salt encapsulation approach, as well as the selective salt recovery. We've once again benchmarked the performance of these technologies against not just the financial metrics, but some of the social and environmental considerations. And really, it's hard to believe that anyone would suggest the salt encapsulation approach. I mean, it doesn't solve the problem. It's expensive. It really has nothing going for it, and really speaks to why it really is the last approach. And of course, these are these are our numbers, and of course, we'd put this forward as saying our approach is superior. But in terms of the financial performance, in terms of producing products from the waste, in terms of permanently dealing with the problem at hand, I think it's really a vastly superior alternative to anything the industry has previously explored. And whilst I'm sure there are other groups who've developed different ways to approach this and will continue to do so, there are some really key innovations that at the heart of our process that I think are really, really difficult to replicate, which I think really positions Parkway quite strongly to deliver a solution to this problem. In terms of having developed this technology-based solution, we have a range of options to be able to monetize this technology. So we're being quite pragmatic as a small company, so we can work with larger companies that already operate these coal seam gas projects, and we can license our technology through QBS. Worley would be part of the engineering, procurement, construction, management of delivering a project, and we would, as the technology provider, receive a share of the value we create, and we can link that to savings and product revenues. There's established industrial business models for how we can capture some of that value. Another alternative, given these large gas companies really producing gas energy is their core business, there's an opportunity for them to essentially pay a third-party service provider to treat their waste, and essentially for them to pay for that service. And in order to enable that, we've sort of outlined a QBS ownership model, where we're part of a group that's responsible for building, developing and operating these plants. And as a result of that, we would capture a larger proportion of the value we create. So we're quite pragmatic around whether we license, whether we're part of the technology delivery capability. But what's important is we can design, we can build, we can develop these opportunities. And as we get feedback from industry, we'll incorporate that into our thinking to ensure we develop a solution that's fit for purpose and in line with the industry's requirements. Now, getting into the thick of some of the details here, we've provided this as a scenario that would potentially represent the sorts of decisions that a CSG operator would be considering. So, of those 4 CSG operators that collectively need to spend $9 billion or so to build one of these or one of the SEF hubs, they're really looking at spending $2.5 billion each for each of those hubs. And of course, the ongoing OPEX and waste disposal costs. So we've just tried to convert that into a scenario and say, okay, if we spread this $2.25 billion in CapEx over 20 years, say the life of the project, that's $112, $113 million a year. The plant would still need to be operated under existing metrics that we outlined in the prior slides. And at the end of that, the industry would still have to pay a waste disposal levy. So really the annual cost for just one of these base case treatment scenarios really is $260 to $270 million a year. Obviously, there's a range of assumptions that have gone into that, but that's the base case for what the industry is eyeing off at the moment and why it's been a bit reluctant to sort of adopt that approach. What we're putting forward, and after all of that, it doesn't actually make the problem go away. I mean, there's still salts that still need to be disposed at the end of that process. So we think if we, through Queensland Brine Solutions, can put forward a solution where we permanently take responsibility to get rid of those salts, so the client pays us to provide a waste treatment solution, and in return, the problem actually goes away. So that's far more attractive. And we think if we can provide that service to the client at half the price of what it otherwise would have cost the customer, commercially that's very, very attractive as well. So just working through the numbers, the 268 million that it would have cost the industry to be able to dispose of these brines, if we were to offer that solution at, in just an illustrative case, $134 million, then that would be really attractive. But given our plant is a lot cheaper to build, a lot cheaper to operate, we would still generate a very significant margin between what it costs us to treat this brine and really what we think we can charge the client, and still leave value for them to deliver them a more attractive solution. And of course, by treating this salt, we produce a range of products. And, just as you would dispose of your household waste at some recycling facility, you don't ask for the residual change. If we recover products from that waste, we believe we should be able to capture that value, particularly if we've built and owned and operating that facility. So just across a single hub, by combining the margin we could make from waste disposal and by combining the revenue we think that can be realised from generating products, we think for QBS we could generate in the order of $95 to $100 million in margin, operating margin, not revenue. All the operating costs are built into that equation. So this is a reason why we've really invested a lot of time and effort to be able to explore this hub concept, and we outline some of the team and how we've gone about developing that. But an opportunity for the industry to achieve a better outcome, cost the industry less, and from our perspective, a commercially attractive model. And it needs to be commercially attractive because we need to be able to bring in partners, waste disposal contractors, industrial chemical companies to help us develop these. So that's a really well-aligned business model that we've developed. And depending on the potential structure of these hubs, we think there's an opportunity to be able to potentially, since we can provide a solution that's a lot more financially attractive for the client, we're of course not going to build one hoping a customer sends their salt. So we'll need to enter into long-term toll treatment contracts, potentially with some prepayment terms. And given our plants are a lot cheaper to build, they're more efficient, we think there's an opportunity to use a couple of years of prepayment to really build the entire plant, potentially with some small contributions from a strategic partner we can bring into QBS. So this is something recently Chief Commercial Officer Mike is working on at the moment, but that's something we're very, very excited about. It really provides an opportunity for QBS to develop a business case, bring in a strategic partner to put up the remainder of the equity, and by the time the project is developed, QBS will own the project. It will have a life of project revenue stream. The customer is happy their waste is being handled by a reputable company. It's a permanent solution. And similarly, our strategic partners and investors that come into QBS can generate predictable cash flows over the life of those projects. And the sorts of parties we're talking to, this is their core business. That's what they do. They manage industrial waste. They produce industrial chemicals. So really, really attractive commercial opportunity.
Well, I agree. The benefits of the technology and the business model, I think with that, QBS will be considered to be a very attractive partner.
Yeah, for sure. So I think those partners we alluded to before, there's a waste disposal element here. So we're actually making salt, ensuring salt doesn't make its way to landfill. And there's also a chemical product, production, industrial chemical stream here. And they're the sorts of parties we're speaking to at the moment to be able to bring into QBS and or a specific project to help us realise those opportunities. So yeah, really, really exciting. So I guess to summarise, in terms of creating value through technology, there's of course very significant ESG requirements and regulatory requirements that we've discussed. It's ultimately the technology, superior technology that we've developed that enables us to be able to deliver a superior solution. And as we look at the technology-based offerings available to industry at the moment, the industry is obviously out of options. There are no obvious solutions. And based on the way, looking at that waste management hierarchy, if we go back to the beginning of the presentation, being able to produce products from these wastes really is a priority. And if a technology-based solution can deliver that, it's our view that that will become the best available technology, that this is technically feasible, it's commercially feasible based on our own studies that have been prepared with, third parties. So that gives us a lot of confidence that, this really is an opportunity, not just to work on a upstream project or a particular hub, but really collaborate with all of industry, which is why we've developed the master plan to outline the scale of what we're working on. So very, very significant opportunity. So just to summarise the advantages of the master plan, these are, of course, enormous problems facing the industry, millions of tonnes of salts. The industry needs a solution, so this isn't some clean-up opportunity that may or may not happen. There's a regulated need. The industry is desperately looking for solutions. Our master plan's developed by proprietary technologies. We think we've got a great technical and commercial capability. We've got leading global partners that will help us realise this. And really, we've developed, in our view, a highly attractive permanent solution, the emphasis being on permanent. So there's no point building lots of plants that concentrate the waste unless it permanently deals with this challenge. And as we've already discussed, some of the techno-economic metrics around cheaper to build, cheaper to operate, avoid disposal fees, generating revenue, that really, if we were to add up that financial advantages, that value stack, over the life of these projects, we believe, compared to business as usual, the base case, we can generate $15 billion of value over a number of decades, of course. But that's a very, very significant value add. And of course, as the group that's developed this technology, we think not only do we have an important role to play, but we think we can capture a fair share, reasonable share of that value as well.
Well, I've known for a while that it was a big opportunity for Parkway's technology, but creating a potentially $500 million of value per annum for 30 years for the industry is enormous. You have a smart team and great partners, so I'm sure you'll find your way for Parkway to capture a share of this value.
Yeah, of course. I mean, I think it is very significant, and I think that there needs to be value created. That's what enables us to bring in partners and be able to develop a solution. Ultimately, I think the lack of value being created by the existing solutions available to industry explains the reluctance. Of course, these are very large, reputable companies, and I'm sure they feel uncomfortable about the large waste streams that are being stored at the moment. But in the absence of a viable alternative, this is the situation we find ourselves in. So, no, I think we've done. I think we're in a great position to work with the industry to be part of the solution. So that's the end of the formal part of the presentation. We've included a few slides here as a little bit of background as to who we are, our team, our group, by way of a little bit of background. So this information is all available on our website. So I'll encourage viewers to check out the website, but for the purposes of completeness, I'll just spend a few moments now, very briefly, just touching on a few key points to wrap up the presentation as to who Parkway is and why we're putting forward Master Plan. So as Parkway, we're an industrial water treatment technology company, so really focused on developing innovative technologies. And within those, we're focused on complex wastewaters. That's really our core business and really significant markets. So the CSG industry obviously fits into that category quite neatly. And really, where we like to differentiate ourselves is we're utilising technologies both to reduce waste and generate value. So some of these projects we're working on outside the CSG industry, that's really what we're looking for. And we have a defined strategy as to, whilst we build our technology business, in the meantime, we have a industrial water treatment business that's already serving, some of the largest energy and mining companies globally. And we've built a very significant and capable team. And I think on the next slide we'll be touching on that very briefly. Our board is chaired by an experienced investment banker, Steven van der Sluis, who's ex-Citibank, was an executive director of Queensland Nickel, not far from where some of these projects are. Myself, Group Managing Director, extensive technology commercialization experience across a range of sectors. Penny is currently Head of Environment and Regulatory Compliance at Cleanaway, a $5 billion Australia's largest industrial waste treatment company. And Aitan is an experienced energy industry CFO, lots of oil and gas industry background, as well as other roles. But importantly, senior finance roles at Santos, even at the time that one of these LNG projects was sanctioned. So at a board level, I'm supported by an experienced team that has developed, operated, maintained, dealt with a whole range of technical and commercial challenges associated with plants very similar to what we're contemplating here. So that's, I think, a team that's I feel very supported by. And similarly, on the commercial, Mike recently joined our team as Chief Commercial Officer. Mike's got extensive expertise in commercializing technologies and bringing in partners and extracting value from those initiatives. And similarly, a very experienced engineering team led by Raza Hassan, Principal Process Engineer at Jacobs, a major global engineering company, and many other colleagues, but in this case we've outlined Dr. Rudy and Anthony, very experienced engineers, have spent their entire working careers within the EPC, engineering, procurement, construction industry. So we're really talking about people who are familiar with what it takes to build large-scale industrial projects. And once again, this is what gives our partners and colleagues and other stakeholders confidence that not only do we know how to develop a solution, but we have the smarts to hopefully be able to deliver a solution for these challenges.
I think it's fair to say you've really built a highly relevant industrial, a team with high relevant industrial expertise, which should help ensuring the goals of the master plan.
Yeah, that's right, Sven. I think the caliber of our team, both at board level, but also commercially and technically, and we have a team at other locations that support our efforts. But I think that's explains why we've been able to achieve what we have to date, and I think also is the right set of skills we need, together with our partners, to be able to move these projects forward. In terms of our group structure, our parent company is Parkway Corporate. We're listed on the Australian Securities Exchange and also in Frankfurt. That's the parent company. We have a water treatment business, PPS. We have a technology division, and it's within this technology division that we've established Queensland Brine Solutions. And Queensland Brine Solutions, of course, is responsible for delivering the master plan, and that itself will have various entities as part of our go-to-market strategy. A little bit of background information here around some of the sectors in which we operate. We provide both conventional solutions, so they're more established water treatment solutions, as well as more innovative, or what we like to call next generation solutions. And these are the sorts of solutions that we're contemplating for the coal seam gas industry, but very large addressable markets. In terms of our technologies and some of the problems we're solving, we're working with very large companies. We're an approved vendor for many of these large global energy and mining companies already. We're ISO accredited for quality, environment, safety, and of course I've mentioned our strategic partners. But collectively, this gives our the CSG companies and industry the confidence that really they're working with a company that's accredited, experienced, already operating in many of these sectors. That's something we've been working on for a number of years to really put ourselves in this position where we're capable of delivering these projects.
Well, in addition to having great technology and an experienced team, I imagine having credible partners and certifications is and will be important a part of being able to build a tier one client base.
That's right, Sven. It is very important, and I think the where we've outlined approved vendor really is important. Often these large established companies have approved vendors, and much of the time opportunities are not even necessarily advertised. These companies reach out to their existing vendors, discuss opportunities and challenges, and the fact that we are routinely on a weekly basis, monthly basis being approved, evaluated, and increasingly doing business with many of these leading companies really is a credit to our team, and really I think demonstrates the caliber of company we've been able to establish in recent years. There's some background information. The whole master plan is really underpinned by technology, and really our ability to capture that value is underpinned by our ability to protect our intellectual property. It's something we understand very well. We have a strategy specifically developed to deal with this requirement, and there's additional information on screen that I'd encourage viewers to review. We also have additional information about our group, Investor Centre, as well as additional presentations and details about our technologies available on our website. And if we do have anyone viewing from industry, or other stakeholders that are interested, we'd encourage you to reach out to us at either Solutions or Investor Relations in the case of Investor Relations. That's essentially a range of resources available around Master Plan. And finally, just to summarise, I'd like to outline that this really is, in our view, a very significant opportunity to address this challenge. I think the best way to do that is through innovative technologies, being able to do things more efficiently, more sustainably. And in order to do that, I think it's important to partner with people and organisations who do this sort of work routinely, who have the courage and the conviction and capabilities to deliver these sorts of solutions. And I think it's important that we view all of this through a sustainability metric. Many of these projects developed many years ago perhaps were developed at a time where sustainability wasn't valued as highly. But in 2023, I think it's incumbent on all of us to develop these things and solutions sustainably. And ultimately, to summarise, we're very much focused on a solution. Everything we've put forward in Master Plan, we're starting off with a problem, and really we want to deliver a solution that addresses all those challenges. So that's an overview of the Master Plan. Thank you, Sven, for supporting the session, and thank you to all the viewers who've spent the time with us on this journey. Thank you.
Well, I'd like to thank you, Bahe. I'm sure viewers will find the presentation and details of our discussion both interesting as well as encouraging. I wish the Parkway team all the very best with Master Plan and hope this initiative will provide a template for how innovative technologies can transform the sustainability of industrial operations. Thanks so much.
Yeah, thank you, Sven. As a team, I think at Parkway we feel an immense sense of responsibility. We've developed this technology, we've developed this solution, we've openly outlined our plan to industry, partners, collaborators, as some might say competitors in the market, to really put forward that there is a solution here. We want to be part of it, we want to lead that process, and I'd like to thank everybody for their support, and similarly, thank you, Sven, for making your time and your support in this journey as well. I look forward to touching base again to provide further details soon.